Oil prices rebound as OPEC Plus opts for modest output hike amid US sanctions pressure. Oil markets regained momentum on Monday after OPEC Plus confirmed a modest production increase, while renewed signals from Washington about potential sanctions on Russian crude added further volatility. Brent crude rose 57 cents or 0.87% to $66.07 a barrel by late morning in New York, while US West Texas Intermediate gained 46 cents or 0.74%, reaching $62.33. Both benchmarks had spiked over a dollar earlier in the session, recovering part of last week's 3% decline triggered by weak US jobs data and subdued demand forecasts. OPEC Plus, which brings together the Organization of Petroleum Exporting Countries, Russia and allied producers, announced it will raise output by 137,000 barrels per day in October. The increase is notably smaller than the 555,000 BPD hikes in August and September. Analysts noted that the effect may be limited as some members are already overproducing, effectively folding existing barrels into the new quota. Saudi Arabia underscored the strategic shift by lowering its official selling price for Asian buyers, prioritizing market share over price defense. By allowing supply back into a market heading towards surplus, OPEC Plus is playing offense, not defense, said Claudio Galimberti, chief economist at Resid Energy. At the same time, US President Donald Trump signaled readiness to impose a second phase of sanctions targeting Russian oil buyers in response to Moscow's escalating war in Ukraine, including its largest aerial assault to date in Kiev. Analysts warn that any punitive measure could significantly disrupt global crude flows, tightening supply despite OPEC's plus modest hike. Washington is also engaging European allies this week to coordinate strategy on both energy security and Ukraine. Traders are closely watching whether sanctions on Russian crude buyers materialize, a move that could amplify US influence over global oil market while intensifying tensions with Moscow. Goldman Sachs, however, projected that long-term supply expansions in the Americas may create a modest surplus by 2026, keeping Brent and WTI forecasts unchanged for 2025 at $56 and $52 a barrel, respectively. For now, US sanctions policy, more than OPEC Plus output decision, appears poised to shape the trajectory of global oil prices in the coming months.